Welcome to the Money Hour with host Tina Mitchell. Tina Mitchell, MLO 145420, is a licensed loan originator with Highlands Residential Mortgage Limited, NMLS 134871. The views expressed by the speakers on the following program are those of the speakers and do not necessarily reflect the views of Highlands Residential Mortgage Limited, nor are they necessarily endorsed by Highlands Residential Mortgage Limited. Now, in the studio, local mortgage expert, Tina Mitchell.
Welcome to the Money Hour at 11:50 a.m. KKNW, the Saturday, September 3rd, Labor Day weekend show. You can also listen to my podcast, cast my show on my Facebook premiere or the YouTube channel. In addition, for more information on upcoming events, please go to tinamitchellevents.com. I am your local mortgage expert and the host of the Money Hour, Tina Mitchell, bringing in expert advice and inside knowledge on today's events and how they can affect your money. If you were hearing my show at a different time or day, you are listening to a rebroadcast. I'm here to answer any questions or connect you with the two guests that I have on the show today. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150, or you can go online to themoneyhour.com. And now for today's lineup, I'm going to be having a panel conversation with my two guests, Samantha Kennedy of Mainsail Financial Group and Charles Lindbergh of Goosehead Insurance. I'll also be having a separate conversation with Samantha, financial independence. What does FIRE mean, and how can we find independence through multiple avenues? My followed conversation will be with Charles, defending against natural disasters. Also, if you're watching my show on my Facebook premiere or on my show YouTube channel, I would like to take this opportunity to introduce two very important people to me. First, my producer over at Hubbard Radio, Benny.
Hi, Tina. Happy early before Labor Day. And don't forget, no white after Labor Day. Don't forget.
Oh, thank you for the reminder, Benny.
Okay.
I really
All right.
appreciate that. Always looking out for me.
That's what I do.
And also my marketing director, Becky.
Hi, Tina. Thank you for having me.
Absolutely. I could not do this show without both of them. Everything that happens behind the scenes is a lot. So thank you, Benny and Becky. I always like saying that, Benny and Becky. All right. Now let's go ahead and start the show as we do each week with a little bit of money chat.
Money.
Tina Mitchell here with your money chat. Jobs report, something big for the markets. Initial job claims, which measures individuals filing for unemployment benefits for the first time, decreased by 5,000 last week. And with the 6,000 lower revision from the prior week, claims are now at 232,000. Continued claims, with measures those who continue to receive benefits after their initial claims, increased 26,000 to 1.438 million, the highest level since April. After a consistent rise in the 4-week average in claims since early April, we've seen a slight moderation in the past few weeks. I believe that the moderation could be due to many of the layoffs that we've been hearing about being in the tech space, and that these very skilled workers are easily finding jobs and have not needed to file for claims. With that being said, claims were 171,000 on April 1st, and today sits at 242,000. So there is still has been a meaningful rise. The markets are expecting 300,000 job creations in the month of August, and for the unemployment rate remain at 3.5%. But after a weaker ADP report, it would lead us to believe that the BLS number may come in under expectations, although it's unclear how well the ADP report will correlate to the BLS with their new methodology. On the other hand, the claims data has been improving in the past few weeks, which would point towards a stronger job picture. It comes down to risk versus reward and what our strategy has been for the past week. Mortgage-backed securities are in deep oversold territory, while the 10-year yield is in deep overbought territory, both signaling that reversal may be due based on momentum. It should be noted that if the job report is strong, yields will likely gravitate towards 3.5, so the jobs report can have a big impact on the markets. Appreciation cools. In the housing news, the National Case-Shiller Home Index, which is considered the gold standard for appreciation, showed home prices rose 0.6% in June and 18% year over year, which is a decline from the previous reading of 19.9% in May, but is still strong. Appreciation is clearly slowing, but of June still increasing at a robust rate. Craig Lazar from Case-Shiller said, prices are clearly increasing at a slower pace. It's important to bear to mind that the declaration and decline are two entirely different things, and that prices are still rising at a robust clip. June's growth rates on all three composites are above the 95th percentile of historical experience. For the first 6 months of 2020, in fact, the national composite is up 10.6%. In the last 35 years, only 4 complete years have witnessed increases that large. The FHFA, Federal Housing Finance Agency, released their home price index, which measures home price appreciation on single-family homes and on conforming loan amounts. Different than Case-Shiller, it does not include cash buyers or jumbo loans. The FHFA reported that the prices rose 0.1% in June and are up 16.2% year over year, which is a decline from 18.3%, but again, still very hot on an annual basis. Apartment List released their monthly rental index, showing that rental prices rose 0.5% in August, which was half of the gain seen in July. Rents are almost up 10% year over year and 7.2% year to date. Looking at a monthly gain of 0.5%, if that were to be analyzed with compounding going forward, it would equate to a rental increase of 6% per year. Call to action. If you're listening to my show right now today and you're a renter, call the show. I would love to take an opportunity to chat with you about what your options would look like for purchasing a new home. Tina Mitchell, and that is your Money Chat. Coming up next in the Money Hour, Samantha Kennedy of Mainsail Financial Group and Charles Lindbergh of Goosehead Insurance right here on 1150 AM KKNW. You are listening to the Money Hour at 1150 AM KKNW, the Saturday, September 3rd and Labor Day weekend show. You can also listen to my show podcast, Facebook premiere. You can catch my show on my show YouTube channel. In addition, for more information on upcoming events, please go to tinamitchellevents.com. I am your host and local mortgage expert, Tina Mitchell. It is a great day to talk about money, and that is what the show is all about: how to make money, save money, so you can have a better quality of life for you and for your family. If you are hearing my show at a different time or day, you are listening to a rebroadcast. I'm here to answer any questions, or more importantly, to connect you with the two guests that I have on the show today. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150, or you can go online to themoneyhour.com. And now on my show, very excited to have a panel conversation with my two guests, Samantha Kennedy of Mainsail Financial Group and Charles Lindbergh of Goosehead Insurance, right here on 1150 AM KKNW. Welcome to both of you. Thank you for joining my virtual show.
Thank you for having us.
Yeah, thanks, Tina.
Yeah, Charles, first time I've had you, and Samantha, it's been a little while since I've had you on the show. So I love the panel conversations, opportunity for my guests to get to know both of you a little bit together before we get into our individual conversations. Each week I come up with different panel questions for my guests, except for question one. I ask this question for every single guest because I think it's most important question for people to get to know a little bit more about you. So Samantha, what brought you into your line of work? What life experience got you here for what you're doing right now today?
Yes. Tina, that question took me back to about 10 years ago. I had the opportunity to work for Amazon for a little bit as a financial analyst. Learned very, very quickly that crunching numbers for the sake of crunching numbers didn't motivate me. I do call it a young life crisis, because it's something where, oh my goodness, after that, I had no idea what I was going to do. But ultimately, it was a life-changing experience and a positive one to lead me to the financial services industry, where every single day I get to build relationships with people.
That is awesome, Samantha. Yeah, you got to get out there and take risks in life. I was in the food and beverage industry for almost 9 years, and the owners of the hotel sold to a big chain. They came in and cut all the profitability for the management team, which I was part of the management team. So I quickly decided, you know what, I need to be in business for myself. And everybody told me, why would you leave a great salary to go to something that was going to pay strictly commission? So you got to get out there and take risks and follow where your passion's taking you, right, Samantha?
Absolutely.
Yeah. So, Charles, what about you? Life experience that brought you into your line of work in insurance?
Well, it's one of those things. Anyone, if you meet someone who owns an agency or is in insurance, either their dad did it, and so that's how they got into it, or they fell into it by complete accident. That's kind of how that
So,
worked for
nothing in the
me.
middle.
No, nothing in the middle. That's
That's
all I've ever heard.
hilarious.
It's like that's the only two stories I hear. So I was the second one, a complete accident. I was looking around for a job. This is back in 2010. So the economy wasn't doing so great, and I finally found just a posting for, hey, come be an insurance agent. We'll teach you everything. You don't need any money. It was just like, well, I literally never considered this before in my life, and it was sales. And I thought insurance was like, I pictured like Humphrey Bogart in a fedora and a briefcase going door to door. That's what I thought insurance was. I was like,
Oh
well,
my gosh.
it's better than nothing, so let's give it a shot. And it turned out to work. So yeah, there you go.
That is hilarious. Yeah, falling into the mortgage industry, I was terrible at math, and I never thought I was going to be a mortgage person either. But when I was left kind of stranded out there, I thought, well, my parents had a challenging time keeping a roof over their head. I bought my home when I was 20. I could be passionate about helping people get a mortgage because somebody helped me. So yeah, it's real. I love that question and finding out, the why behind. So, Samantha, what is the single most important reason that you feel that you see success in your business?
Great question again, Tina. You know, I think COVID has had a lot of challenges, but really it's been the past 2 years have had the most growth opportunities and learning experiences in my life to date. And the single change that I notice has happened over the past few years is every conversation I have, I search to learn something. And so every day is a scavenger hunt. Whereas honestly, before COVID, it was okay, well, what do I need to know from that conversation or what's the checklist? And now I'm a little bit more relaxed where every day it is learning something new, finding the why behind why people care about things. And that drives me way more than doing everything perfectly.
Yeah, that is so great. Getting to know people, who they are as a person, and how that connects. Just like my first question for you, what brought you into your line of work? There is something that connects in somebody's story that brings them to you in needing, or Charles or myself in needing whatever product or service that we have to offer. Yeah, that's great. So, Charles, what about you? What single most important reason do you feel that you see success in your business?
Yeah, I would say it's the relationship. So whether you're in sales, whether you're selling shoes or houses or cars or whatever, it's really all about the people and relationships. And are you able to connect with people and build, especially if you want to work by referral, relationships that last a long time. So I think that's something I've really focused on. We only work by referral. We don't really spend money on marketing or events. I mean, I do a little bit here and there, but it's mostly because those events are fun. So we really focus on doing having great referral partners and doing a good job for our clients so they feel like they would want to send their friends and family to us. And that's really what we focus on.
Yeah, I'm right there with you, and I know Samantha is as well. Why stalk the cold when you can court the warm? So I want to build relationships, and I want people to come to me because they said, "Hey, Charles said I need to talk with you." And that is a fun way to do business when you're going through the calling process. It's not. So some people do really well and excel at it, but I choose to court the warm for sure. So, Samantha, looking back, what is one thing that you would have done differently in your business and why?
Ooh, this was another soul searching question. So I've been in the industry just about 8 years up until this point. And one thing specifically the first 5 years that I wish I would have done differently is not focused on the results as much, but focusing on the activity and the learning. I think it's difficult to start your own business and have the drive every single day. And quite frankly, there are ups and there are downs. And the first 5 years were very, very difficult because all I was focusing on is what's the productivity. Whereas now I'm a little bit more at peace with the up and downs. And it's how can I measure growth and still track productivity, but not have that be the only measurement.
Yeah, what great advice. I wake up every day with two intentions. One, to be a little bit better today than I was yesterday, and the second, to be an inspiration to at least one person. And if I can do that, my day is a huge success. And just as you, Samantha, because I know you personally, you're a visualizer like I am. I mean, I visualize and I have a goal and a plan of what it's going to look like at the end, but I don't focus on that. That's just there, and that's that big goal. I'm focusing on right now in this second. What am I choosing to do in the second, and how is it going to level me up just a little bit? Might have heard the term yesterday's history, tomorrow's a mystery, today's your gift, and that's why they call it the present. So I totally agree with you, Samantha. Charles, what about for you? Looking back, what is one thing that you would have done differently in your business, and why?
Well, I don't want to steal Samantha's answer, but I mean, that's a pretty good place to start. Honestly, we have the same issue. You do a lot of work and you don't see results for a few months at least. But I would say another good one is finding a mentor sooner rather than later. So that was something, thinking back on, I was like, wow, I really didn't really have anybody that I knew personally when I started for the first several years who was at a level I wanted to be at, until maybe a couple of years ago. I met several people in other states, unfortunately, but they're doing really well at what I do. And it's good to be able to just send them an email or give them a call. And I think especially if you're working by yourself, you can feel like you're on an island and you need to be able to have folks to talk to.
Absolutely. Thank you for keying me up here, Charles. So if you're listening to the show right now, I am in the top 1% in the nation in mortgages. That's what I do for a living. I own a mortgage software. And so financially, I do very well. As important as my money producing businesses is my community platform. And I've created a substantial platform to really help people. So if you're looking for a mentor in a group setting, go to tinamitchellevents.com. I have a time management and business efficiency course, and I have a personal mastery course, all complimentary, and I don't sell anything there. It is my way to give back to my community. So thanks again for the key up there, Charles. All right. And one more shout out and kind of what we talked about with Samantha, and then Charles seconded it as well before he added an addition in there. If you have not watched the Chinese bamboo tree, it is a much watch. Understanding the Chinese bamboo tree, it takes 5 years for it to break ground. When it breaks ground, it goes 90 feet in 6 weeks. You literally can see the Chinese bamboo tree growing right in front of you. So when you're thinking that those efforts, those things that you're doing are not making a difference in your business because you're not seeing any results, every single thing is. It is making a difference, good or bad, depending on what you're doing. But it's what's happening underneath the foundation. So visualize that Chinese bamboo tree and then know that it's growing. You just need to keep watering and fertilizing it, because if you don't, it's going to die. So, all right. Samantha, how is running a successful business different than what you thought it would be 8 years ago when you started in your financial arena?
The biggest difference is you do not need an idea to be perfect or to know exactly how it'll look to try a new idea. And that's something where there's a perfectionist side of me, and I want to always give the highest level of service. And at the same time, having everything be perfect can mean nothing actually ever happens.
Yeah.
And so there's a balance. It's listening to clients, it's developing relationships, but it's also trying new communication styles, explaining a concept in a new way that maybe hasn't been rehearsed 100 times. And that has been quite successful because I continue to improve, and it doesn't take months each time to implement something because that practice time has been condensed quite a bit. So I think there's a foundation to running a successful business. It's similar activities every day and being consistent, like watering a bamboo tree. And it's sprinkling in a little bit of, I'll call it chaos, but almost premeditated chaos where you
I
are
love that.
improving your skills.
Yeah. Yeah. The steps is get inspired by somebody, and then take that inspiration and create your own, make it your own. And then get it out to the market. And once you get it out to the market and all of its imperfection, that's how you're leveling it up. You cannot level anything up behind the scenes. Just as you said, Samantha, I launched my mortgage software 10 years ago and it's not perfect still. I'd still be trying to figure out my coaching platforms if I didn't put it out there. And to think where it started at, kind of a little horrifying now, but I thought I had something pretty awesome. I've gotten over my perfectionism, many years ago, but yeah, you have to put it out to the market, because when it's out there, you're actually doing it and people are giving you their constructive feedback so that you can level it up and make it better. Yeah. Great advice, Samantha. So, Charles, how is running a successful business different than what you thought it might look like in your insurance business?
Yeah, it's one of those things here where in our industry, you can, if you wanted to be a sole proprietor for 30 years, or you can hire just a couple folks, or you can be like the big ballers who have like multiple offices in multiple states. So when I started, I had no intentions of doing anything you would call high level. I was like, hey, maybe it's just going to be me for a while. Maybe I'll have somebody. And so again, kind of going with the mentorship thing, and kind of they opened my eyes to, hey, this is what we're doing. Here's what's possible. I've really thought more and more in the last couple of years about hiring folks and having an intentional plan of, hey, this is how big it can go. Here's all the different possibilities. So it's one of those things where it kind of, once you're in it, once you're doing it, you start getting ideas and you start thinking about what you want to do with it. So I've really changed my intention of where I want to go since the last 10 years.
That is really exciting. I don't believe in a one-man show. Embrace your strengths and hire out your weaknesses. If you don't have an assistant, you are your assistant. If you don't have a marketing person, you're a marketing person. If you don't have somebody doing your books, you need to have somebody doing your books. So great panel conversation with both of you. I really appreciate it. Again, it's a great opportunity for my listeners that are listening right now to get to know the two of you together as we get into our individual interviews. So on that note, coming up next in the Money Hour, financial independence. What does FIRE mean? And how can we find independence through multiple avenues? I have Samantha Kennedy of Mainsail Financial Group right here on 1150 AM KKNW. You are listening to the Money Hour at 1150 AM KKNW, the Saturday, September 3rd, Labor Day weekend show. You can also listen to my show podcast, my Facebook premiere, or you can catch my show on my show YouTube channel. In addition, for more information on my community outreach events platform, go to tinamitchellevents.com. I am your host and local mortgage expert, Tina Mitchell. I am here to help you build a strong financial blueprint 1 week and one show at a time. If you are hearing my show at a different time or day, you are listening to a rebroadcast. I'm here to answer any questions or connect you with the guests that I have on the show today. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. Now back in studio, Samantha Kennedy of Mainsail Financial Group. Financial independence. What does FIRE mean, and how can we find independence through multiple avenues? Right here on 1150 AM KKNW. So Samantha, before I get into the questions that I have for you, I want to give a little background about you. So Samantha, life is full of miracles. At the age of 3, she was adopted from China to a loving family after being malnutritioned with little stability. When Samantha looks back, she realized her journey has taken her from not knowing where her next meal was coming from to supporting others to plan for their future through the role of a financial advisor. The desire to help individuals and families prepare for financial stable future while developing lifelong friendships is what provides purpose for Samantha. She finds joy in celebrating her clients' wins, as well as being a resource while they are conquering fears on the way to realizing their own goals. With over 7 years in the financial services industry, Samantha has discovered no two people have the same dreams, and there is always more to learn. Beautiful words in your introduction, Samantha. Thank you for providing that for me. And I'm really excited to showcase you and showcase what you do for my listeners. So thank you again, Samantha, for being here.
Absolutely. Thank you so much for having me, Tina.
Yeah. If I didn't know you when I was reading that bio for the first time, it would have brought me to tears. But I know you very well, and again, it's just a pleasure to have you and to have you as a friend and on my show as an expert in the financial arena, because you are definitely one of the best. So, Samantha, let's go ahead and start out with if you can share with my listeners your why you do what you do.
Absolutely. So, what keeps me motivated every single day is not just picturing retirement 30, 40 years in the future. It's picturing what type of life do people want to build today, and how can we build a roadmap to get there? And the why behind that is finding what's important to whoever I'm talking to. It's interesting because financial planning or really financial independence, it means something different to everybody. Sometimes it means I don't want to have to work. Sometimes it means I want to have the choice to work. And then for other people, it's I really love my job, but I'd love to be able to do this for free or to be able to give back to my community. So it's interesting because through the years, the why or what drives me every day has evolved to how can I help the family or the individual I'm working with discover their drive and ultimately build a path that's maybe just a little bit more efficient to get there.
Yeah, when you have a why and you are living your why every time you get up, then that's where it continues to evolve, like you were talking about, Samantha, because you're living in it. Just like anything else in life, when we're living it, it evolves and we keep getting more embraced in that. So thank you for sharing that. So how does your why relate to the fire, and what is the fire movement?
Yes, finally getting
This is
to your
exciting.
question. It is. So there was a little bit of a clue in the I guess maybe a cliffhanger there,
Uh,
is the FI in FIRE is actually financial independence. So what I would encourage all of us listening today is, what does financial independence mean to you? Does it mean not having to work, not having to set an alarm? Does it mean perhaps supporting not only your family, but your community? Does it mean being able to support a cause that you are incredibly driven by? You're the boss of your own life and you get to make the rules. So financial independence is not a definition provided by a textbook or even a financial advisor if you work with one. It's really taking the time to think about, well, what's important to you and what does independence mean in your life? And then RE is retire early. And so the retire early is also a bit subjective, not by the textbook. Currently, retirement age is age 65. And the reason that is the age is because Medicare or health insurance, when you are no longer working, is available then. So, from a cost perspective, a lot of people work until 65. But retirement is building the life you want and ideally when you want it to happen. So, FIRE is financial independence and retire early.
I love that, Samantha. So, how has financial planning changed in the last 3 years?
Ooh, I would argue every industry has changed day and night over
Yeah,
the
that's
past
so
3 years.
true.
So, very easy question for me to answer
Mhm.
today. How it has changed most is building connections with people, I have noticed is much easier. Prior to COVID, getting really even getting under the skin or figuring out what someone gets passionate about
Mhm.
almost took 5, 10 conversations, multiple hours until they're comfortable. But over the past 2 years, and what has made my job so much more exciting is everyone I talk to is willing to share something that they are going through that, quite frankly, is a challenge. And the reason that ties to financial planning is if you don't know why you're doing something, quite frankly, it doesn't matter how good the plan is. You're not going to be motivated, or it's not going to keep up the momentum that it did from day one. But if you take the time to figure out, well, what bothers you, or maybe even more inspiring, what makes you excited, or what do you wake up every day and you're thrilled to have potentially be an outcome, that is the motivation that we're looking for. And over the past 3 years, it has become so much easier to be blunt and ask what's important to you and not have the answer be surface level, such as not worrying about my mortgage payment next month. Although, Tina, I will say, not having a mortgage payment or having a mortgage payment that fits into your budget is
Yeah,
incredibly relieving.
absolutely. So what do you think why for that shift, Samantha?
I think it's because everyone has been challenged over the past 3 years for industries where you used to meet in person, across the table, have a handshake, give someone a hug. That did not exist for 2 years, or there was a lot of hesitancy. And so, listening, actively listening, not thinking about what are you going to say next, has become more and more important. And also, because location, I would argue, does not matter as much compared to 3 years ago, we're able to build relationships and learn from other people's experiences in a way that I would say it wasn't impossible 3 years ago, but it certainly wasn't the norm.
Yeah, yeah, that's great. So, what are you doing to protect your clients given the current market volatility?
Yes, probably the understatement of the year, current market volatility and inflation. And then in your
Mhm.
world, Tina, certainly interest rates as well. Right now, it's really making sure that we have that nest egg. And that's where financial planning comes into play, is if you do not need to liquidate any of your assets, market volatility does not matter because it's not impacting your life today, tomorrow, or ideally over the next few months. Now, that's laying a foundation that, quite frankly, probably needed to happen well before January of this year. What we are doing now for our clients is researching certain sectors that are not used very often. So, for instance, Mainsail does a lot of their own investment research, and we have spent a lot of time looking at commodities. And so, if you think of
Mhm.
commodities, quite literally tangible goods, maybe wheat, food, fruit you see in the grocery store, during market volatile times, interest rate increases, and then inflation, commodities tend to do a little bit better because if you have the choice to purchase a gallon of milk versus a new iPad, the decision's pretty darn clear. So
Mm.
that's one example. And then one more quick example, going back to the sectors, is if we look at two broad categories of investments in terms of stocks, we have growth and value. Growth, think of Microsoft, Google, Amazon, companies that are innovative and normally they don't pay a very high dividend because they're reinvesting that money into the company to grow or have the share price itself increase. Those companies had a huge run up in 2020 and 2021, and not a huge shock because the entire world went to remote. And
Uh-huh.
so the tech sector did very, very well. But we're noticing a shift from growth to value. So when you think of value, think of Home Depot, or if you're in the Pacific Northwest, Kroger, Fred Meyer, QFC. And it comes back to the fundamentals of when people have a tighter budget or might need to watch their dollars a little bit more closely, the essentials of everyday life tends to be a little bit more stable moving forward. So a little bit of a long-winded answer there. The current market volatility, the first point is making sure you don't need money to sustain your quality of life. That should not be invested. And so not needing to liquidate something at an inopportune time. And the second piece is making sure that your investments are in the correct buckets given the current market conditions.
And that's why I have you here today, Samantha, because it's critically important that you work with an expert in this space in order to navigate. I introduce every single one of my clients to Samantha. Every client in my initial consultation gets an introduction to Samantha. She offers all of my clients and any clients a 90-minute consultation. And I feel blessed to have you part of my power team, Samantha. And yeah, it's just like, a home ownership. I mean, if you could predict what any market's going to do, then we all would do that, but you can't. And when is the best time to do something is when you want to get into home ownership, buy a home, and you just don't want to overextend. Just like Samantha says with financing, you need to have money to live. You don't want to buy something that you're going to overextend on your mortgage. Don't worry about what the market's going to do. You don't lose money in real estate unless you're forced to sell in a bad market and you're not reinvesting. And don't worry about rate, because you can date your rate. You date your rate and you marry your home. You can always turn around and refinance, but you're locking in whatever that potential appreciation would be. So Samantha, what is the biggest mistake someone can make during uncertain times?
Boom. Making a decision or being reactionary out of fear. Markets are volatile. Your game plan for life will have bumps in the road. But as long as you have a long-term strategy and you know what behavior or what activity needs to happen, and you can, to some extent, stay the course during uneasy time, that will increase your odds of success tremendously. So the biggest mistake I've seen, and unfortunately, really over the past 2 years, are people acting out of fear and not reassessing where they are in terms of their goals.
Yeah. So, what is one piece of advice that you would give to someone who is terrified of their personal finances?
Yes. The first recommendation I would give is asking yourself the question, why are you scared? Are you afraid someone's going to tell you what to do? Are you afraid that your life will no longer have any fun? Are you afraid that you'll discover a problem that you have no idea how to solve? As soon as you know why you're terrified of something, the beast becomes a little bit smaller because A, you're giving it some attention and awareness, but B, it doesn't have the weight it does when you just ignore something. So, my encouragement to someone who thinks they're just terrified of finances, they don't know anything, is ask yourself, why are you scared? And then I would encourage you to, whether it's a family member or a trusted advisor, to talk with someone and ask them, what do you think about this situation? So that you're not only in your own head in that fear.
Yeah, great advice. What are a few financial habits that you can adopt to get started, Samantha?
I think the first habit I would almost encourage anyone to do is think of something you enjoy and that you would do if money just didn't matter, and then have that be a part of your budget. I think budgeting can sometimes be constraining in activities. But for instance, I love to run every day. So part of my budget is money towards running shoes or money towards a race. And when those events happen, it's not an additional expense, it's something a part of life.
Samantha, thank you so much. And I got to wrap up, but just really quickly in like three words, if you can. How can you sprinkle a little bit of fun in your financial plan?
Ooh,
Few minute or a few
yes.
word answer.
Oh, it's a little bit of fun. Find what you're passionate about.
Oh, I love that. You rocked it. All right, Samantha, thank you so much. It's a pleasure to have you here. Reach out to the show. I can get you connected with Samantha. I really appreciate you. Thank you.
Thank you, Tina.
Coming up next in the Money Hour, defending against natural disasters, I have Charles Lindbergh of Goosehead Insurance right here on 1150 AM KKNW. Hey, Charles, first time on the show.
Thanks, Tina. Yeah, no, I appreciate the invite. It's great to be here with you.
Yeah, I was so excited. I actually didn't do the intro back into the show. Let me backtrack and do the intro back into the show. You're listening to the Money Hour on 1150 AM KKNW, the Saturday, September 3rd, Labor Day weekend show. You can also listen to my show podcast, Facebook premiere, or catch me on my show YouTube channel. I'm your host and local mortgage expert, Tina Mitchell. And I have Charles here. And yes, I'm very excited to have him in studio. So Charles, before we get started with my questions I have for you, I'm going to share a little bit about you to my listeners. So Charles is an insurance broker with Goosehead Insurance and has been in the insurance industry since 2013. His primary focus is helping families find the best possible option for their personal auto, home, umbrella, flood, earthquake policies. He has extensive experience working with real estate developers, investors as well. With a focus on client education, Charles wants you to feel confident and comfortable with your insurance policy. His goal is to make insurance as easy, quick, and affordable as possible. All right, Charles. So again, really excited to have a conversation here with you. First time that I've had you on the show and just very excited. So Charles, insurance companies don't typically cover damages for earthquake. Has that changed? And do you have a normal homeowners insurance policy that covers earthquake insurance?
Yeah, great question, Tina. That's something we mention to any person who's buying a new property or we're doing a review on their insurance with them for their home. We always mention, hey, earthquake's not covered. We live in the Pacific Northwest. We kind of gauge their level of concern about that. Some people are really worried about it. Other people aren't. But your base home policy, unless you specifically ask them to, they're not going to include earthquake coverage on there. Some companies, they do have the capability to let you just add it on. Other companies don't have that, and so you'll have to go get a little separate standalone earthquake policy to go along with your home insurance. So yeah, if it's a concern for someone and they're not sure if they have it, they can probably check their current policy and call their agent. So they'll either add it on to what they have or go get something separate to go along with their current home policy.
Yeah, doing mortgages and working with people through their homeowners insurance, I have to say that 1 out of even more than 100 I ever see get earthquake insurance. It's kind of shocking. All right, so how do you get earthquake insurance and what does it cost? Because, I've seen drastically difference in cost for earthquake insurance. So can you share a little bit on that?
Yeah, it's kind of all over the place, unfortunately. It really depends on a lot of factors for the home, like the age, the build style, the local geography. Is there any sort of slope involved with the local terrain, and where in the state or where in the city it's located? So in general, I would say most earthquake insurance is going to be maybe on the low end, like $400 per year for a home in our Seattle area, all the way up to maybe $1,000 or $1,200 a year, depending again on the size and the age of the home. But the good news is, if you're living on the east side of the mountains, over in Spokane, Walla Walla, Yakima, you can get earthquake insurance for just a few $100 a year because, to my knowledge, the entire bedrock over there is basalt, and the earthquake risk is a lot lower on that side of the state. So,
Really?
yeah, it's unfortunately it's something we don't know about the pricing until I go check it out for someone on a given home. So. Yeah, I always give people a ballpark, but we have to check everything one by one just to check.
Well, if you're in Eastern Washington right now listening to the show, you need to give Charles a call and talk about what it would look like for earthquake insurance, because that is cheap for earthquake insurance for people over on the east of the mountains. So does your home have to be retrofitted for an earthquake to get an earthquake insurance policy?
Good question. So no, they don't. Some companies might. Well, I'll put it this way. In general, no. But I would definitely recommend that if you do have a house here, you go check out to see if it has been retrofitted, if you did it yourself, and then check out what that might cost to have that done. I know a number of years ago, there was I think it was the New York Times or something, article came out about earthquake in our area, and then everyone was a mad rush to get that done. And so there's a huge backlog for contractors. I don't think that's the situation now. So if you want to have that done, I think thankfully there's probably not too bad of a wait. But yeah, it'd be something I would just personally recommend every homeowner to do.
Absolutely. So Charles, who needs flood insurance, and what does that look like as far as what it actually covers?
Yeah, so flood insurance is something most people are only really ever going to run into if they're trying to buy a new place. And the lender says, hey, this place is in a high risk flood zone. You need to get flood insurance. And like, oh, well, great. What's that going to cost me? It's one of those things where it's a pretty straightforward policy, but it's not the most intuitive thing. To get flood insurance, it's a separate standalone policy. So it's not going to be something you can get on your home insurance. It's a thing that goes along with it. And it really covers two things: the house and the stuff in the house. And then that's pretty much it. They do give you money if you get displaced from your home due to flood damage. That's called loss of use. That's just built into the policy, but really it's for your contents in your home. The reason I mentioned flood's not super intuitive is because flood damage is specifically going to protect you against water that comes across your property boundary line. So it's not originating from within your home or within your property. And for you to be able to use your flood policy, you either have to have your home and a neighbor get affected, or if you're the only home that's affected, you have to have at least 2 acres of previously dry land be inundated with water as well. So there's a few stipulations around it, which makes it kind of clunky for folks. But in general, yeah, for most people in our area, they'll only come across it if it's if the home they're buying is in a high risk zone and the lender brings it up.
Yeah, and from the mortgage side, it's if you're listening to the show and you're looking at buying a property, most likely that's going to be in a flood zone, you need to talk with your mortgage consultant, make sure that they understand that, because typically they're not ever putting that in. And if you're going up to your maximum debt to income ratio, that can actually flip the whole thing when it comes up that you need to get flood insurance through that flood cert. So you want to make sure that you're letting your mortgage professional know that ahead of time, so you're not going to get stuck in the middle of closing, because that's going to be bad if now you no longer qualify to purchase purchase that home once you're under contract. So make sure that you're talking with your insurance agent and what that's going to cost if you're in a flood zone. So will insurance cover floods in basement from heavier than normal Seattle rain, or does it have to be unique to a weather event?
Yeah, so the nice thing is there's no requirement of like having a named storm or anything like that. Kind of as I mentioned before, there's only a few stipulations. The water has to be an outside source, cross your boundary line. So yeah, if we have an example where there's super heavy rain and maybe just the drainage or the topography of your local spot in your neighborhood isn't the best for some reason, and that causes water damage, as long as, like I mentioned before, it affects you and a neighbor, that's something you can use. With regards to the coverage for the basement contents, in general, there will be no coverage for anything you have in the basement unless you specifically add it on to your flood
Really?
policy. So that's an optional thing. It's good to check
Okay.
if you have that. And some basements in the area, they have, it's unfinished. They have a washer and dryer and the furnace down there and the water tank, and that's about it. Other folks obviously have a very nice, fully finished basement
Yeah.
with lots of stuff in there. So if that's your situation and you're at all worried about flood damage, that's something to check out on your policy.
Yeah, that's a big deal. And that's why it's so important. This is why I have the show, is I bring the best of the best in this show each and every week, because I want to connect you, if you're listening to the show, with people that are the best of the best, and they can really navigate, because there's big mistakes that can be made in the insurance arena. And that's a nightmare, just a nightmare in itself, to have to deal with a claim, but then find out when you're trying to work through that claim that you're not covered is can be devastating. So Charles, it might seem a little bit odd to ask about tornadoes in the Pacific Northwest, but we do have them here sometimes. So does normal insurance cover tornado damage at all?
Yeah, the good news is your normal base home policy is going to cover it, because what they provide coverage for is windstorm. And a tornado is just a really bad, souped up, fast windstorm. So that's automatically covered. Yeah, and it is kind of weird. I had to go check this out. We've actually had a few, I think 1 or 2 tornadoes in the state, basically the last couple of years. They've all been very low category, very brief. I think I even found a YouTube video of someone's at a ball game and they saw a tornado form in Spokane. It was crazy.
Wow.
So yeah, I mean, they do happen and they're very brief, but they have caused a few disasters here recently.
So good. It's part of your policy. You don't have to pay extra for it.
Exactly.
So if you must evacuate for potential of a natural disaster like a tornado or wildfire, you talked a little bit about expenses getting covered. Is your living expenses and relocation costs and all of that, is that a standard that's going to be covered?
Yeah, it should be something that every home policy has built in. They'll call it loss of use. They might call it additional living expenses, but they should have a coverage on there called that. And you want to make sure that if they have a dollar figure on there, that what they have sounds like it's something you could use if you had to spend, worst case scenario, 8, 10, 12 months out of your house. So if you have a major disaster happen at your home and it's unlivable and you have to be somewhere else, all those expenses with restaurants and your Airbnb of choice and relocation costs, your insurance company should pay for, but make sure that what they have for you sounds like enough if you guys had to pack everything up and be somewhere else for a year.
Yeah, my husband caught our kitchen on fire and we lived in a
no.
hotel for 9 months. Went from a 4,100 square foot home to, I don't know, a 300, 400 square foot hotel room with our dog. So that was quite the experience, but feel fortunate that I had insurance. So, and great insurance for that. So what should you look for in your policy to make sure that you have your rebuilding cost are sufficient with changing all the changes that are happening with construction costs, just like everything else going up?
Yeah, that's probably one of the number one things I've talked to folks here recently if they're doing like a refinance or they've owned their home for 5, 10 years, is we always check what their rebuild cost is going to be for their home. So if you look at your home policy, if you have one now, the very first thing on there should say something like coverage A or dwelling coverage, and it'll have a big number. I would say a good example of an average home here in Seattle might be $400,000 or $500,000 rebuild. So they're not looking at what the market value is for the house. They're looking at what's it going to cost to have contractors come in there, rebuild it just the way it is right now. And we've been seeing that number go up. So with inflation and supply chain issues, Those numbers have just been going up and up and up. So when I see a client has an existing policy, we do review. I'm like, wow, we need to bump this up by $50,000 for you. Good news, it's $30 or $50 a year more, but that's a lot of money if you did have a major loss at your property.
So would you say a call to action for anybody that's listening right now, Charles, because construction costs are up, that you need to check with your insurance agent and make sure that you've got enough coverage?
Definitely. Yeah. If it's been a while since you let your policy, I would say more than 3 years, definitely just have them, hey, can you just quickly rerun the estimate for me and let me know if I have enough coverage. Some companies do build in an inflation guard in their policy, so it does go up by a couple percent every year, which is nice. But even on top of that, maybe need a bit more. So ask your agent, definitely.
Yeah, and there's been a lot of changes in the insurance arena. I was having a conversation with Charles before we opened up the show. And as your host of the Money Hour, call to action is to reach out to the show. I want to get you connected with Charles. He can do a consultation review analysis of your current policy and let you know if he can save you money. It's always it's good to check and make sure that you have the best possible coverage at the lowest possible cost, especially now with all these changes going on. So, Charles, can you explain what an umbrella policy is for people and what does that typically cost?
Yeah, this is one of the big things we always mention to folks as well. I would compare it to kind of like getting cancer insurance. An umbrella policy is something I hope you never need to use. It's going to kind of cover you for big catastrophic events. And it's also really affordable for what it gives you. So that's what I like to compare it to. But essentially, it's if you have a situation where there's a big car accident or somebody gets hurt on your property and they are coming after you and they say, hey, I need compensation. I have pain and suffering. I have, who knows, PTSD, medical bills, all that stuff. And it's very, very expensive. And your underlying policy runs out of money to pay for it. Normally in that situation, you would have to come up with the difference. So if your auto policy stops paying at $100,000, when someone has $400,000 of medical bills, now you would be on the hook for $300,000. An umbrella policy's sole job is to stop that. So they provide coverage starting usually at $1 million and they go up from there. So in that situation, your umbrella policy would turn on after your auto policy ran out of money and it would pay that $300,000 difference. And you, financially speaking, would be a-okay. I don't know if this is something that Samantha and folks like her talk about as well, because if you have a great financial plan, can get derailed by one bad claim or one bad lawsuit.
Yeah, absolutely. Less than a minute left in the show. And I know you can answer this question in probably one word. Who needs umbrella policy?
Basically, at this point in our area, everyone.
Everyone. So there's another call to action. If you're listening to the show, you need to make sure that you have an umbrella policy. Everyone needs it. It is, like Charles says, it's very inexpensive to have it, and you want to make sure that you're set up. And hopefully, you don't get cancer. As Charles says, it's like that. But the reality is a lot of people do. So with an umbrella policy, it's not going to help you on the cancer side of it, but it's going to make sure that you're covered with what your insurance doesn't pick up. So everyone needs an umbrella policy. Charles, thank you so much for being here today on my virtual show and sharing with my listeners. I appreciate you.
Yeah, thanks so much, Tina. It's great talking with you.
And that is the wrap up for the show. Tina Mitchell, your host and your local mortgage expert. Enjoy the rest of your weekend, our long Labor Day weekend, a chance to rest after the long hours that we put in our businesses. So I hope you enjoy it with your family. I look forward to talking more money with you next weekend. I want to give a shout out again and a wave goodbye for people that are watching us on video to my two amazing guests, Charles and Samantha. Reach out to the show, go to online at themoneyhour.com and I can connect you with either one of them. And signing off, see you next weekend right here on 1150 AM KKNW.